Hello traders, it's Alfonso Moreno from 𝐷𝐻𝐻 here. Today I'm going to dive into the Japanese yen forex cross pairs on the CAD yen, the euro yen, the Swiss franc versus Japanese yen, and also the Singapore dollar versus the Japanese yen. Most yen cross pairs are doing more or less the same thing, and yeah, they are doing what we expected after the crazy market gap we saw when Japan elected a new prime minister. We were talking about that here. Okay, I have updated this video analysis a couple of times since then. So that happened, that was the election, and then price continued to rally. So I'm gonna dive into this. Those imbalances, some of them played out beautifully. Now we've got brand new imbalances on the daily on these four forex cross pairs, like I mentioned, and I will show you how to use these swing forex imbalances to plan intraday forex trades like a professional, without indicators, without noise, without losing your life in front of the charts. So recalling the previous analysis, we had, I'm going to zoom out a little bit, we had a strong imbalance over here on the daily. Okay, we had another one here. Okay, and that one at the bottom there. So a few weeks ago I made that video right after the election of new prime minister in Japan, and the markets opened with a huge gap, as you can see down there. Other forex cross pairs on the Japanese yen, they retraced to these levels and played out. I'm focusing on these four, which are some of the major ones. And as I mentioned, that kind of price action usually creates new fresh demand levels, and that we need to wait patiently for confirmation. So for the pullback, it didn't happen on this, but price then continued to rally and creating new imbalances on the daily. And these imbalances are also mentioned as for Caroline Trading Academy. As you can see now, we have new bullish impulse, new highs being printed, and we have the euro yen again, the demand level on the euro yen forex cross pair at 180 is rallying and trying to print new highs, expecting to do the same thing that the Canadian dollar versus the Japanese yen did. When we fast forward, these demand levels have been created, are in control, and these imbalances did exactly what we expected. Many of these zones, of these levels that we can see here, were discussed in the for Caroline Trading Academy, and reminding us once again that the fundamentals for Forex get priced into these imbalances, and it doesn't matter regardless of whatever happens in the world, to be honest. So the bigger picture, Nikkei index is bullish. So I'm gonna take a look at the futures, Nikkei futures. So Nikkei futures is trying to rally and create new demand levels on the 4 hour. Probably we're gonna have one here, exactly right there. We have one here, but price didn't pull back. Another one at around 48,800. So Nikkei is rallying, and since, as we already know, the Japanese yen cross pairs are highly correlated with the Nikkei. If Nikkei is rallying, then the Japanese yen is going to get weaker, and that means that a bullish leg will be created against the currency on the left, in this case the euro, the Canadian dollar, the Swiss franc, and the Singapore dollar. So new demand levels have been created, continues to respect these levels, almost like reading a textbook on supply and demand imbalances. And when we switch to the 4 hour time frames, we can see that the reaction to those levels, okay, have created new strong imbalances on the euro, on the Canadian dollar versus the yen around 111. So we are waiting for that to happen, but it just didn't pull back. Probably will continue higher and create new imbalances. On the euro yen, we have a new potential area demand being created around here, about 180. On the Swiss franc, we will still have no signs of anything. On the Swiss franc, we are waiting for the demand level to be reached around 181. And that's, probably could happen, hopefully, because this is a very nice imbalance made of 3 large candlestick bodies, but it just didn't pull back the way it did with the Canadian dollar or the euro versus the yen cross pair. So on the Canadian dollar, on the Swiss franc, we are waiting. On the Singapore dollar, we can see now on the 4-hour, well, we actually have one level there in control, but that's a little bit weak. So we have the strong one here that has played out here. So now we need new impulses, and that's probably going to happen following suit what the Canadian dollar is doing. It's getting stronger against the Japanese yen. So these uptrends are being respected perfectly. They are now mature trends on the daily, on the weekly. We have weekly uptrend on the Canadian dollar, the euro versus Japanese yen, on the Swiss franc, on the Singapore dollar. And if we take a look at the, I'm going to rule this one out because the demand level hasn't been reached yet. So I'm going to use, where is it, at the top, yeah, reacting to, and on the 4-hour, well, we have potentially a new demand level here on the British pound at 206, more or less. We're expecting this, okay? So the Forex, this Forex trading approach uses, as I said, imbalances, supply and demand imbalances, some strategy that I came up with many years ago. This is a perfect environment to apply what I teach in the intraday supply and demand course that is available also and was recently launched, that will help you trade off these large time frame imbalances with a high degree of accuracy. For that, it's great for intraday and scalpers, but we need obviously an imbalancing control. We just cannot trade out of nowhere in no man's land. So with this approach, you are not fighting the market, you are not guessing, you are just following the bigger picture, which is clearly bullish on all the Japanese cross pairs together with Nikkei futures. And this is, I believe, in my humble opinion, the best way to trade Forex properly, with a strategy. And this is not the only one, obviously. Supply and demand is not the only one. That doesn't require you to sacrifice your life or your sanity. You just need to understand imbalances and how they are created, and understand that the fractal nature of Forex price also happens on stocks and cryptos, and how supply and demand governs every chart. So unless something dramatic happens on the Nikkei, probably in an index, or on the correlated, highly correlated Japanese yen cross pairs, and I don't mean the news, I mean a real imbalance, strong bearish impulse that tells us to wait for the weekly instead of the daily, we are good to go on new demand levels on 4-hour and even lower time frames. So you can use EMA crosses, whatever you want, but obviously using these imbalances as support. So if you want to master this approach and finally understand why markets move the way they do, well, check out Skyrocket and the courses and the community. Will take you by the hand. And of course, subscribe to the 𝐓𝐵𝐽 channel if you want more supply and demand price action videos like this one. I will be updating them as price unfolds. Have a great day.